Okay, good morning, everyone. My name is Andrew Palmatier. I'm a program director with the United States Energy Association. I thank you very much for joining us this morning in the US and this afternoon in Europe. Today, it's my pleasure to open a second virtual event to cover the key findings of a study that was done over the course of the last 12 months with funding from the US Department of Energy and carried out with the Gas Technology Institute and ADI Analytics. The study, which we'll get into the details of later, was focused on the potential and key enablers for the deployment of small-scale liquefied natural gas in Central and Eastern Europe. It was a very interesting project that I was pleased to be a part of. We very much enjoyed our conversations with stakeholders in the region, as well as US stakeholders in the process. And with that, it's my pleasure to introduce the representative from the US Department of Energy, Amy Sweeney, to provide some opening remarks. Amy is the director of the Office of Regulation, Analysis, and Engagement at the Office of Fossil Energy in the US Department of Energy. Amy, please, the floor is yours, and thank you for joining us. Oh, sorry, Amy, I believe you're muted.
Thank you. Hopefully, I'm just getting that out of the way so nobody else will encounter that issue today. All right. Well, thanks, Andrew. And good morning to everybody, and good morning to good afternoon to our colleagues in Europe. I really appreciate everyone joining us today. So thanks to Andrew and US Energy Association for organizing this virtual workshop, and to the Gas Technology Institute and ADI Analytics, who will be our speakers today. So taking it back to 2018, and the United States and the government of 22 European countries agreed to establish the Partnership for Transatlantic Energy Cooperation, or PTEC. PTEC is an international platform designed to provide policymakers and other stakeholders in Central and Eastern Europe with the resources and technical tools to build secure, resilient, and reliable energy systems. The energy security of our allies and partners in Central and Eastern Europe is a key objective of U.S. foreign policy. And at DOE, via the study you will hear more about today, we are pleased to play a role in helping to understand the dynamic of that market and the potential for small-scale and containerized LNG within it. We initially kicked off this study with stakeholder workshops in Albania and Montenegro a year ago, and the final study was completed toward the end of last year. The study examines the market potential for small-scale LNG in the region and identifies infrastructure needs and necessary policy and regulatory reforms to enable the deployment of small-scale LNG to the region. LNG is a versatile fuel and offers a compelling lower emissions alternative for consumers outside the power sector, where large-scale volumes of LNG are traditionally used. LNG in smaller amounts can be a highly cost-competitive and reliable lower emissions substitute for refined oil products in a variety of sectors, including industrial, commercial, transportation, and even small-scale power generation. So there's an opportunity to develop a small-scale LNG market within and between Central and European countries by building a virtual pipeline system that's above ground and can accommodate deliveries by truck, ship, and even, mainly by truck and ship to users like small power plants, industry, and truck and industry refueling stations. Such a virtual pipeline, which doesn't require the build-out of major energy infrastructure such as regasification terminals or physical underground pipeline networks, is well positioned to supply LNG to new users with limited infrastructure investments. In many parts of the world, including other parts of Europe, a market for small-scale LNG is already developing. Here in the United States, a company operating a small-scale LNG plant in Florida has been exporting containerized LNG to countries in the Caribbean, including Barbados, the Bahamas, Haiti, and Jamaica, for several years. These LNG shipments are allowing these countries access to a lower cost and cleaner fuel source that is helping them diversify their energy supplies and meet their demand, access they wouldn't otherwise have. The study we are presenting today has two goals: to introduce the small-scale LNG concept to stakeholders in government and industry and to identify the specific challenges associated with small-scale LNG and how they can be addressed. Now to preview a couple of the study's findings. Every country in Central and Eastern Europe can realize strong economic and environmental benefits from the use of small-scale and containerized LNG in various applications, with some of the most promising applications being road and marine transportation and industrial and manufacturing segments. The main challenge to developing small-scale LNG markets in countries where it does not yet exist is a shared understanding among business, industry, and government leaders of the potential costs and benefits of this energy supply source. We hope the study will fill that information gap. Another challenge is that the policies that promote alternative fuels are often designed broadly and need to be made more specific to apply to small-scale LNG. So with that, I hope that today's workshop will inspire new ideas about how countries in Central and Eastern Europe can diversify their energy sectors and understand the reliability and emissions benefits from using LNG in new applications. Thanks very much, and now I turn it back to you, Andrew.
Well, thank you very much, Amy, for those the contextual background about the history of the study, as well as some of the U.S. government efforts in this space. So I'd like to make a few administrative logistical notes here at the beginning. So you should see on your screens a box or an option for Q&A through WebEx. So please, as the presentation is moving along, feel free to submit any questions that you would like. We will take questions at the end, so we'll have two presentations outlining the key findings of the study, and then we'll have a moderated Q&A session. So please feel free to submit your questions. We'll get to them at the end of the presentation, and of course, if you do have any questions that either we run out of time or don't cover, please feel free to contact myself or Ernest Wyatt. I would also add that the study is available now on the USEA website. So please feel free after the meeting today to find your way over to that report. We will share the link with all the participants today. So with that, it's my great pleasure now to introduce the team from the Gas Technology Institute who we partnered with and who led this study. First, I'd like to introduce Rod Rinholm, the Executive Director of International Business for the Gas Technology Institute. And he'll also be joined by Kashin Liu, the Program Manager for GTI. So Rod, please, I'd ask you to take control here, and I believe you have some slides to share. Thank you for joining us this morning.
Great, thank you, Andrew, and pleasure to be here, and nice to meet you all virtually. As you may know, as part of this overall project, we'd intended to hold some live workshops in Eastern and Central Europe, but as you expect, that's on hold for now, at least, and hopefully that situation changes in the next, over the next year. But this is a great study to work on, and appreciate the opportunity from USEA and US DOE to work on a study on the opportunities for small-scale, LNG in Central and Eastern Europe. As Andrew noted, I'm Rod Rinholm with GTI. We're a research and technology organization, based in the Chicago area. And we work across the energy spectrum, but with a focus, I'd say, on natural gas and some of the emerging kind of derivatives of gas. We partnered on the study with ADI Analytics, which is a boutique consulting firm, based in Houston, and Uday Taraga and Panisway Dwavedi from ADI will be on for part of this presentation here, kind of covering the key findings and some of the recommendations from the bulk of the activity or the study itself. I'm joined by Kashin Liu, my colleague based in Chicago as well. So Kashin may also contribute to the presentation here today. In terms of the overall, session here, this is the broader agenda. So we'd like to, just kind of cover the initially the kind of the key findings, and then get into some of the methodology and approach we used through the study, which, as Andrew noted, was held through pretty much through the course of 2020. We wrapped it up with the final report delivered to USEA late last year, and as Andrew noted, that's available on the USEA website. I'll turn it over to Uday and Panisway to do a deeper dive into some of the regional and some of the country-specific findings, through the course of the study. And then at the end, we'll have about a half hour at least, I think, for some Q&A or discussion, kind of following the presentation. In terms of the general objectives, I think Amy covered these well, but just to reiterate, 4 main objectives for the overall study. One was to look at understanding the potential for small-scale LNG in this region and in some of the specific countries that are part of the Central and Eastern European region. That was the focus here. Also looked then at what are the key infrastructure needs that are needed to enable the growth of small-scale LNG in the region, and where are maybe the demand or the use opportunities that show the most promise within the region, and then finally look at some actionable recommendations to address the opportunities, whether it's infrastructure based, whether it's policy based, whether it's information dissemination, what can be done to really accelerate the growth of small scale LNG in the region. This is the geographic scope, so it covers 15 countries in Central and Eastern Europe, as you can see, from Poland in the north to Albania in the south, and then kind of spreading across Austria to Romania and Bulgaria. And we'll talk to specific opportunities in the broader region as well as specific opportunities in the country. And certainly there's a lot more detail in the report itself. So if you have a chance following the session today to download the report, to dig into that in detail. If you have questions on that, we'd be happy to entertain those at any point via email at a later time. In terms of the overall scope of the study, we progressed through it in 3 primary elements, beginning in early 2020 with workshops, as Amy noted, in Albania and Montenegro to get some input and some guidance from some of the key stakeholders in the region. A bulk of the activity then proceeded, through the I'd say second, third quarter of 2020, and that included some interviews with a kind of a broad cross section of stakeholders that are involved in the LNG space or touch the LNG space. So including government officials, both U.S. and some of the country officials. Investors in the region, some of the current players from the energy and natural gas side already, as well as prospective users of LNG in the region. The analysis also included a pretty extensive array of secondary research to look at some of the macro, economic and energy factors that influence the supply and demand for small-scale LNG. And then we also built a spreadsheet model that would include some of the factors that influence the growth of LNG in the region and use that as a screening tool to help to identify maybe some of the more promising markets and uncover some of the issues that may impact the prospective growth of small-scale LNG in the region and specific countries specifically. And then again, as noted, we intended on the third part of the study to present the study and have more in-depth discussions in the region with the stakeholders. We're now doing these virtually, and we had our first virtual workshop in mid-December. This is the encore performance for that workshop, and again, glad you're able to attend this. So with that, let me turn it to Uday Taraga from ADI Analytics, and Uday will cover the kind of key findings. We'll go through some of the supply and the demand, kind of factors and opportunities that we see, and then into some of the policy considerations. And then, as noted, we'll have some time for Q&A at the end. So with that, Uday, can you take over control of the slides from Wyatt or Ernest?
Hi, good morning. Thanks, Rod. Hope everyone can hear me okay. as Rod and Andrew have introduced, right, we've been working on this study for the last few months, and let's quickly go through the findings. Before we do that, I do want to say that the presentation today is essentially focusing on the key highlights from the report, and the report is a much more comprehensive document. So if you want some of the details and want to get a little bit more granular around this work, then we encourage you to download a copy of the report and go through that. Four major findings from the work that from the work here. First, a third of the countries in the region that we looked at can immediately benefit from small-scale LNG. So Hungary, Poland, Serbia, Albania, Slovakia, and North Macedonia are the countries where we think that the conditions are supportive for wider scale, immediate near-term adoption of small-scale LNG. This finding is based on the screening analysis that we have done, looking at a number of factors, macroeconomic factors impacting the region. And the key drivers that we see behind these countries being able to immediately exploit and adopt small-scale LNG are fourfold. First and foremost, we see robust economic growth in these countries relative to the others in the region. As a result, that is driving energy demand growth more broadly, but more specifically, we see high demand growth for diesel. We see a lot of growth in demand for remote energy. And what we mean by remote energy is demand for energy in areas that have significant energy supply constraints, whether it is the lack of pipelines or regions where the cost of supplying fuel is high enough that makes it a little less competitive, and therefore one relies on the more traditional choices. And then finally, rapid natural gas demand growth. We believe that regions that have rapid growth in natural gas demand have better awareness of gas as a fuel for powering their energy needs, and that then drives greater interest and greater awareness of small-scale LNG as another option. In terms of applications, which is the second key finding that we are focused on, trucking and industrial applications followed by marine transportation are where we see the most promising opportunities for small-scale LNG. We'll get into these applications in a little bit more detail, but at a high level, if you look at heavy-duty trucking, for example, we find that the price differential between diesel and LNG in these top-tier countries is fairly attractive, and to justify the investment in let's say in an LNG fuel truck, and therefore also has attractive payback periods. So that price differential between diesel and LNG is critical to kind of drive adoption for small-scale LNG in heavy-duty trucking. We see a similar advantage for marine transportation, but it's not as robust as we see in terms of the price differentials that we see for heavy-duty trucking. And then we'll get into this a little bit more. Industrial demand, the primary driver is energy demand growth that cannot be supplied efficiently or economically because of the lack of supply infrastructure, in particular pipeline infrastructure. So that's a segment where we see the third opportunity for small-scale LNG in terms of applications. Clearly, infrastructure is a big part of the equation here, and that's what brings us to our third finding. In general, the region has limited LNG infrastructure, and particularly so at the smaller scale. Now, having said that, global LNG market dynamics are showing that LNG prices are falling, LNG is a commodity, LNG is getting commoditized, and as a result, the prices are low enough that LNG can compete with, let's say, diesel in heavy-duty trucking or in some of the other applications. even if it is trucked in or barged into the region from nearby terminals. Now, having said that, if the region makes new investments in infrastructure, the overall economics of small-scale LNG will improve further. And as a result, I think in the medium to longer term, we need new investments in order to fully exploit the opportunity associated with small-scale LNG. The level of investments that are necessary vary quite a bit. It could include just simply the addition of a little bit of equipment at existing LNG import terminals so that they can provide what are known as small-scale LNG services, or it could be investment in new terminals at sea or river ports that are able to handle ISO containers. So there's a broad range of, there's a broad spectrum of the level of investment needs that are necessary in order to further accelerate adoption of small-scale LNG. What is helpful here is that in general, if you look at the broader LNG industry, as LNG supply into the market has increased, the cost of infrastructure across the value chain has started falling, and we have seen significant cost reductions over the last 10 years because of innovation in the space. So the cost of investing or the level of investments that are necessary for this infrastructure is not as high as it would have been, let's say, 5 or 10 years back. So therefore, projects that were considered, let's say, a few years back, but were discarded as being too expensive, there's a lot of value in maybe revisiting them and looking at those projects because the overall cost of infrastructure across the LNG value chain has fallen. The last set of findings is around policy-related issues. Clearly, policy has to be supportive for the adoption of small-scale LNG. There are a number of stakeholders in the region, from government agencies and regulators to pipeline operators to state and private-owned companies, and then finally private investors and multilateral institutions that are supporting investments in the region. From the work that we have done, and again, the report will go into this in a little bit more detail than we do in the presentation here today, but transparent and flexible policies, especially policies that provide an even level playing field to all the fuels in order and allow them to kind of compete based on their overall greenhouse gas footprint and economics is something that will support and drive small-scale LNG adoption. There's clearly the need for a lot of clarity around the regulatory frameworks. There's a need for some financial incentives. And finally, a piece that we saw through our interviews in the region was that overall public and institutional awareness of small-scale LNG as a very credible energy supply source was limited. And so raising that public and institutional awareness around small-scale LNG would also be important in order to further accelerate adoption of small-scale LNG. So let's dive into some of these findings in a little bit more detail. But before we get started, just want to set a little bit of context and clarify some of the definitions. If you look at what we mean by small-scale LNG, very simply, it is all capacity that is less than 1 million tons per annum or so. We've also looked at containerized LNG, which is essentially LNG that is being transported in ISO containers. And a typical ISO container can hold something like 10,000 gallons or 16 tons, right? So for those of you who think in cubic meters, that's a little over 2,000 cubic meters or so. Now, in comparison, if you look at the traditional LNG value chain, if you look at large scale or mid-scale LNG terminals, the traditional large-scale LNG terminals consist of several trains. Each train will have anywhere from 3 to 8 million tons per annum of capacity. So in comparison, right, when we are looking at small-scale LNG, we are looking at everything less than 1 million tons per annum, if you tend to think of it in terms of supply. In terms of applications for small-scale LNG, there are a number of applications actually where small-scale LNG, where LNG can be used as a fuel at the smaller scales. But there are 5 areas where we see the biggest opportunity. There's clearly power generation. So traditional large-scale LNG, most of it is used to fire power plants, gas-fired power plants. We don't see as strong an opportunity for LNG at the smaller scales for power generation, except in cases where there's a need for off-grid power, or there's a need for power generation for, let's say, peak shaving applications like we see in the Northeast. It is possible that some power plants as high as 80 to 100 megawatts can be served with LNG at the smaller scales. There are actually commercially operating plants at those scales, but a lot of things have to kind of come together to justify the economics of such a project. So we tend to see them more as one-off opportunities rather than systemic application where small-scale LNG can be differentiated. So if you then tend to think of like what are the applications where small-scale LNG can systemically find applications, we really think of three major applications: trucking or heavy-duty trucking, marine applications, and then industrial. Heavy-duty trucking is where we see the biggest opportunity in road transportation. It is possible that some applications could also be developed in commercial buses that are running on long routes over long distances. But it's really heavy-duty trucking where the biggest opportunity is from an application point of view. Now, clearly, what we are talking about here is at a generic level, thinking about small-scale LNG. The relative opportunity set associated with each of these applications can vary depending on a specific region that you're looking at. Marine transportation is another segment where we see significant opportunity for small-scale LNG. And then finally, industrial. Industrial is a very fragmented segment. When you think of opportunities for using small-scale LNG, it can go in, it can end up in a wide range of areas, including manufacturing, mining, agriculture. But we are also seeing small-scale LNG being used as a fuel for road construction, for data centers, as providing backup power. So lots of applications there. In certain parts of the world, small-scale LNG can be used as a fuel for rail transportation, but the opportunity set here is getting increasingly limited for small-scale LNG, primarily because electrification of rail infrastructure is a lot more straightforward as opposed to, let's say, switching to a small-scale LNG. If you now think of the small-scale LNG value chain, and what we're trying to do here is introduce the small-scale value chain, but also differentiate it to the traditional, conventional, large-scale LNG value chain. So the traditional value chain is you have gas field, you pipe gas into a large liquefaction plant that's typically at a port. You then transport it via ship to an LNG importing terminal or receiving terminal that usually has regasification capacity there. That LNG is regasified back into natural gas and then pipelined into various end users who more often than not tend to be large gas-fired power generation plants. So in comparison to this conventional LNG value chain that's shown here in gray, the small-scale LNG value chain has a lot more touch points, has a lot more flexibility, has a lot more variations to it. But at a high level, you bring gas into a small liquefaction plant, liquefy the gas into LNG, and then transport it again through multiple options to a receiving or a regasification terminal. Most small-scale LNG receiving terminals have the ability to receive LNG via barge, tanker, or truck from a larger LNG receiving terminal as well. And we see this configuration quite widely, for example, in Europe. Once you have the LNG at a receiving terminal, it can end up in a wide range of applications. As we just talked, it can get into, it can be transported into filling stations for fuel, for trucks. It can go to other marine terminals or into marine vessels, and similarly some off-grid power generation and remote city gas networks. again, these are examples of some applications. As I mentioned, there are lots of other applications as well. So having set some of the background here, let's get into some of the core findings, and then let's discuss some of that in a little bit more detail here. One of the big pieces of the work that we have done is to kind of evaluate what is the opportunity for small-scale LNG in the 15 countries in Central and Eastern Europe. Clearly, we were taking a high-level approach. There are lots of factors that have an impact on demand for small-scale LNG. So we had to kind of come up with some sort of a framework to kind of evaluate which countries have the best opportunities here. So we identified a number of factors that have a bearing on demand for small-scale LNG, or on the creation of demand for small-scale LNG, and we built a simple spreadsheet model that took data across all of these metrics for all the 15 regions and screened the regions based on this screening framework. Broadly speaking, most of the metrics fell into 5 or 6 big buckets. Energy demand, and this included different variants: total energy, energy used in industrial, transportation, or remote applications. Natural gas demand, as I said, from the work that ADI has done in the past in small and large scale LNG, what we find is that countries that have a lot of experience in using natural gas tend to adopt to small scale LNG a lot faster relative to other countries who are considering small scale LNG. The natural gas demand, again, we segmented it in multiple ways. We looked at overall gas demand growth, but we also looked at the share of natural gas that's ending up in industrial applications, transportation, remote applications. And again, we took multiple variants of those factors in our screening model. We also looked at power generation and both in terms of growth of power generation as well as growth of gas-fired power generation. Diesel demand was another big factor that was important for us in the screening criteria, followed by natural gas supply, and then a few other factors like overall GDP growth, how close was it, what was the access to coastline like, what was the distance from a nearest terminal, and things like that. Clearly, lots of factors here, so we weighted all of them based on their relative contribution to demand for small-scale LNG, and you have some of those weights here. So, if you look at diesel demand, we looked at only 3 factors there, but we gave most of them the highest weighting. In comparison, if you look at power generation, because we know from prior work that the relative opportunity set is limited except for, let's say, off-grid power, we gave the highest weighting only to a couple of those factors. So based on this, we then gather data across these metrics for these countries, and these are just some examples. So if you look at, clearly we started off at a high level with GDP growth and overall energy demand growth, and you'll see that there's quite a bit of variation across the countries in the region in terms of overall energy demand growth, so that played into the model. Similarly, we looked at diesel supply growth because diesel supply growth is a reflection of its use of a growing transportation segment, especially heavy-duty transportation. But a lot of diesel also is used as a fuel for backup power generation in remote areas. So that provides us with some insight into where the best opportunity set might be. And clearly you'll see, although diesel prices tend to be relatively distributed across a narrow range, we see a much broader distribution for diesel supply growth, which kind of plays into the screening that the ranking that we ended up with across these countries. So based on the screening analysis, we basically came into these 3 tiers. One thing to keep in mind is this is we try to make it as quantitative as possible by taking all the data across all these metrics. But it is possible that countries where we have designated as not being fertile for small-scale LNG growth in the near term, there might still be opportunities in these countries where a number of things are coming together. There might be a particular off-grid industrial user that's tending to use a lot of diesel, for which they're paying a lot of price, and it's possible that for that particular end user, adopting to small-scale LNG might make a lot of sense immediately. But at a broad level, considering all these macroeconomic factors, we see the best opportunities for small-scale LNG adoption in the near term, so in the next few years, to be in these 6 countries: Hungary, Poland, Serbia, Albania, Slovakia, and North Macedonia. The next year, probably in the next, I'd say 5 years or so, we see opportunities in the Czech Republic, Slovenia, Croatia, and Bosnia. And then finally, there'll be the significant infrastructure that would have to be invested before we'll see opportunities for small-scale LNG in places like Kosovo, Bulgaria, Austria. Diving a little bit deeper, and we've touched upon this somewhat, but the primary drivers for these countries that we see as to why we see they're fertile from a small-scale adoption point of view in the near term is because of high gas demand growth and relative supply constraints for natural gas. A lot more policy clarity around that is supportive of LNG, and finally some investments that they are making in the area, along with, of course, supportive factors in multiple demand segments. For the countries in the medium term, the challenges are that the infrastructure associated with supply, or whether it is natural gas more broadly or more specifically small-scale LNG, is going to take some time to develop. And similarly, in the countries where the opportunity is more in the longer term, the challenges are both on the policy and regulatory side, as well as the fact that there has to be substantial investment in infrastructure before we'll see greater uptake for small-scale LNG. Again, some highlights of the screening study here. What we see, what we're showing here is natural gas demand growth on the x-axis and the potential for small-scale LNG adoption. And the size of the bubble represents the total demand for natural gas in the country. So you can really see, right, that Poland, Serbia, North Macedonia, for example, they have very high growth rates for natural gas demand, and as a result, that contributes to their being in that top tier or in that segment where the best opportunity for small-scale LNG is in the near term. Similarly, we looked at remote energy demand, which we think is a key driver for small-scale LNG adoption in the region. We only see Serbia that has a lot of supportive factors, followed to a certain extent by Albania and Bosnia. But even if you look at some of the other countries, they still have fairly robust remote energy demand growth. So if you look at some of these countries, the energy demand growth in remote applications is somewhat like 3-4 percentage points, which is quite high when you look at the broad range of energy demand growth in general across the region. So let's switch gears and talk a little bit about demand. So more broadly speaking, and I'll go through this a little more quickly here because some of this is fairly well understood. But if you look at the broad drivers for small-scale LNG demand, we see 6 of them. Clearly, environmental and air quality regulations. A number of countries want to switch away from diesel as a fuel in transportation or backup power, or in some cases, a diesel that's being used in remote areas for power generation, primarily because of environmental and air quality regulations. A second driver is the price differential that exists between LNG and whatever incumbent fuel that is being used in an application, for example, diesel in transportation. As end users notice that that differential is growing, they see the opportunity for significant savings in energy use, and that can play a role in driving demand for small-scale LNG. Constraints in energy supply, areas that are remote, whose energy needs are growing but are not being served by existing energy supply infrastructure, whether it is pipelines or whether it is other forms of fuel that is being supplied into the region. We often find them fairly interested in small-scale LNG. Price elasticity is another factor. As the supply of LNG has grown into the market, prices have come down, the new supply is increasingly cost competitive. And because of that, we are seeing segments of demand open up that in the past would not have considered small-scale LNG because they thought it was too expensive. Broader decarbonization policies are driving interest in small-scale LNG, especially in some of the remote energy demand applications. And then finally, we see a lot of innovation. Clearly, there's been a lot of technology innovation in the small-scale LNG value chain over the last decade as new capacity has come on stream. But there's also been a lot of business model innovation. Traditionally, LNG would be supplied, would be sold using an index that was indexed, using an index that used the crude oil price as an input. We are seeing greater price commoditization right now of LNG. And as a result, we are seeing very creative contracting structures that business model innovation is also opening up new demand for small-scale LNG. So, one of the big drivers for small-scale LNG demand is the opportunity for fuel cost savings for end users. So we are showing some analysis here for the heavy-duty trucking application. So if you are looking at buying a new truck and you want to go from a diesel to an LNG fuel truck, you have to make an incremental investment of anywhere from 30,000 to 60,000 euros for the LNG fuel truck. So the primary driver here is how quickly can an end user or an owner operator of an LNG fuel truck recover that incremental capital cost that they would have to incur for buying an LNG fuel truck. And that's a function of what the price differential between diesel and LNG is. So depending on the kind of price differentials that you see, the payback period can vary. So if you have a price differential of, let's say, $1.50, you can recover this incremental investment within as little as 2 years. We'll show you some analysis later that shows that the price differential is a little lower, but it is still substantive and allows for fairly rapid recovery of the incremental investment. So this is this price differential and the related economics associated with it for an end user is a big factor in driving small-scale LNG demand. If you look at Central and Eastern Europe now and look at LNG demand for heavy-duty trucking, and you think about like what is the incremental opportunity associated for small-scale LNG in heavy-duty trucking in Central and Eastern Europe, that is what we are trying to show on this particular chart. So we know that across Europe in general, there are about 300 LNG fueling stations that collectively account for about 150 million gallons per year. So today in Central and Eastern Europe, we only have about 15 or 16 LNG fueling stations that accounts for about 8 million gallons per year of LNG demand in heavy-duty trucking. Even if you assume that the region can have, on a per capita basis, the same kind of LNG demand that we see across the European Union, that number could be triple LNG demand in trucking in the region. So that would mean an additional 34 LNG fueling stations that incrementally account for about 16 million additional gallons of LNG annually. So it's a fairly robust near-term opportunity if the right set of policy and regulatory drivers are in place. Another way to look at demand for small-scale LNG is to look at another segment. Here we are looking at marine transportation. So in comparison to, let's say, LNG-fueled heavy-duty trucks, LNG use as a fuel in marine transportation has a much higher incremental capital cost. And if you then look at the price differential that exists between the two fuels, what we see is that payback periods can be a lot smaller than what we saw in heavy-duty trucking. And that's primarily because the utilization of marine transportation assets is a lot higher than the utilization of, let's say, heavy-duty trucks. And as a result, we see a lot of interest in marine transportation for small-scale LNG. Of course, what has helped is in marine transportation is that the International Maritime Organization has mandated the use of low sulfur fuels in marine transportation. So the IMO 2020 rule limits the sulfur content of fuel oils that are used in marine transportation. And as marine fleet operators have thought about complying with this regulation, some of them have looked at the issue in a longer term and said that this might be the time to actually make a shift to LNG, because not only does it allow them to comply with the sulfur content regulations, it also positions them well in case there is broader regulation around the carbon content, or there's greater decarbonization pressure around marine transportation going forward. In terms of drivers, some of the other drivers we mentioned was around price elasticity of LNG. As LNG prices have fallen, that has opened up new demand. A big driver for the commoditization of LNG in the last 10 years has been the US, where because of the rapid increase in shale gas production that we have seen in the US, natural gas prices have fallen, and the primary monetization strategy for a lot of the gas producers here has been LNG exports after displacing coal-fired power generation. And in general, the broad expectation is that these low prices will continue to stay in the US for a very long period of time, as long as the next 20, 30 years. And that essentially creates a significant opportunity for the US to be a low-cost LNG supplier into various markets. And as a result, that's opening up new applications and demand for small-scale LNG, and more broadly LNG, even at the larger scales. So collectively, we've looked at the economics of small-scale LNG in trucking, industrial, and other applications across the region. And what we have tried to do is summarize on a qualitative basis where we see the best opportunities for small-scale LNG in terms of applications across the regions. And you'll see that trucking is where there are significant opportunities. Lots of countries can benefit from small-scale LNG in the trucking sector. In comparison, marine is limited. Some of this is, of course, limited on a geographic basis, right? Limited to areas where there is marine infrastructure, depending on access to coastlines and all that. And then finally, we see some applications for industrial. So in comparison to, let's say, trucking or marine, we see lots of countries in the industrial segment that have medium level opportunities for, or moderate opportunities for small-scale LNG in the region. We believe that this segment can get a lot more attractive if public and institutional and industrial awareness around small-scale LNG grows, and therefore we see opportunities to kind of drive some of that awareness as a way to drive overall adoption. So in comparison, rail, we just don't see as much of an opportunity in the region for small-scale LNG. So let's switch gears a little bit and talk a little bit about supply and infrastructure, which was another key finding from our work. Before we get into that, let's talk a little bit, just to quickly introduce some LNG supply models. But you know, the typical supply model to an end user is some sort of LNG sourcing, right? It could be a small scale LNG terminal or a small scale LNG plant, or it could be a large scale LNG terminal that offers small scale LNG services. But you're basically going to get LNG from one of those sources. You're going to have some sort of truck loading infrastructure transported by truck into multiple applications. It could end up at a filling station for heavy duty trucks, or it could be regasified at an industrial site and used in industrial applications. You can do some sort of bunkering or ship reloading or break bulk kind of activities for marine applications. Load LNG into smaller vessels, transport it, and either serve end users or fuel marine bunkering infrastructure. So those are a couple ways in which you can think of LNG supply models. Now, if you look at the region and you look at the LNG infrastructure that's there right now, so there are about 27 large-scale and 7 small-scale LNG import terminals that supply that supply LNG into Europe. Now, if you look at the region, a key challenge for the region is that most of the large-scale LNG terminals are not near the region, and the ones and there are only a couple, and they're shown here by this red dotted circle, that actually offer small-scale LNG services. So that's a key challenge that we see here. Of course, LNG prices are getting competitive to the point that you can still truck LNG from these terminals into the region or from some other parts of Europe and still compete with diesel in certain countries. But those economics are going to get a lot better if there are infrastructure investments that bring in more small-scale LNG into the region. We talked about this earlier, but you know, the cost of new infrastructure across the LNG value chain is falling. You know, if you look at a conventional LNG import terminal, you'd have to invest as much as €1 billion. But today, because a lot of new LNG terminals are based on FSRUs, there's the opportunity. Those costs have fallen significantly. One thing to keep in mind is that the axis here is a logarithmic axis. It's not a linear axis. So these are dramatic cost reductions that we have seen in LNG infrastructure. And of course, when you think of small-scale LNG import terminals, whether they're bringing in ISO containers and all, you're just talking of investments in the tens of millions of euros. So there's significant cost reduction that can be supportive of new investments around the small-scale LNG infrastructure. Taking a deeper dive, we talked about this a little bit earlier, but if you kind of zoom into the region, right, there are a few small-scale LNG plants and terminals in the region, but you know, further investment is needed in order, both in terms of you know, infrastructure to bring in small-scale LNG through ports or other small-scale LNG terminals, but also there's need for additional infrastructure just within the region, whether it is in terms of filling stations or industrial distribution break bulk facilities. So, again, we take a look here at like what is the cost of some of these small scale service infrastructure for LNG. Again, there's a number of types of infrastructure that is needed. A lot of these could be provided at large scale LNG import terminals. But if you look at the capex for some of this small scale service infrastructure, it's not very expensive, and that creates an opportunity to kind of take existing LNG receiving terminals and make investments there that would allow the ability to serve small-scale LNG needs a lot more effectively. There are, there are opportunities to also invest in ports on seas and rivers that can bring in containerized LNG volumes. There is some discussion around that in the region, but clearly some of that has to be facilitated and incentivized. But that's another way in which small-scale LNG can be brought into the region, and that could become another fairly effective infrastructure investment as well to drive adoption of small-scale LNG in the region. We then look at some costs and economics associated with small-scale LNG from an end user's perspective. But before we do that, right, if you look at the heavy-duty trucking segment, there are some multiple sourcing models for a fueling station. They can directly get LNG via truck transported to the filling station by sourcing that LNG from a large-scale LNG receiving terminal that offers small-scale LNG services, that has truck racks that can load trucks with LNG. Alternatively, you can bring in LNG via ISO containers and then move those ISO containers by road into filling stations. Or if you have a small port nearby that's capable of handling ISO containers, you can bring ISO containers, ship in ISO containers, and then move it to a fueling station. So there are a couple of these options in terms of how you can source LNG. What we've done is then we've estimated some costs and economics associated with what LNG delivered to a filling station will cost like. What does the cost breakdown of that look like? So we assume some sort of an average LNG price at the nearest index. We estimated costs associated with truck loading and truck transportation that gets us. We made some assumptions around the distances based on some actual data on the distance of the nearest or the average distances between filling stations and large-scale LNG receiving terminals. Based on that, we estimated total LNG delivered cost. There's not a lot of clarity around what the taxation structure will be for LNG as a fuel, but we made some assumptions there that gets us to total delivered price with taxes for LNG as a fuel for heavy-duty trucks. If you compare that to the existing diesel price, which is almost €1.20 a litre in the region on average, that creates a pretty significant differential of about 60 cents or so. And that differential is what the end user will use to pay down the incremental cost of investment associated with buying an LNG fuel truck. So that's a fairly robust price differential, and that's what the real opportunity associated with LNG as a fuel in heavy-duty trucking is. Of course, and we talked about this a little bit earlier, but LNG filling stations and the fueling station network is fairly limited right now. There are about 16 fueling stations in the region, and there has to be significant investments here in order to fully exploit this opportunity. We do similar analysis for LNG use in marine applications, and if we go one slide forward, we do a similar analysis. Again, we make an assumption around LNG price using the nearest index pricing. We estimate some costs associated with ship loading and shipping costs that gets us to the delivered LNG price. And then we compare that to the price of the incumbent fuel, which is marine gas oil. Now, of course, what you'll see here is that the differential is not as robust. It's just a couple cents relative to, let's say, the 60 cents that we saw for heavy-duty trucking earlier. But some of that is related to just the price of the incumbent fuel. So if you look at marine gas oil price, it's only about 16, 17 cents a liter in comparison to $1 or a €1.20 for diesel that's used in heavy-duty trucking. So the overall prices are compressed here, which is why we see just a small differential. But one thing to keep in mind is even a couple cents that a marine fleet operator can save on fuel is fairly significant, because they are spending, they are traveling long distances and are spending a lot on fuel, and that can provide a significant incentive for them to make that incremental investment to switch towards LNG. We also looked at industrial applications. Here we're looking at LNG as a fuel that is displacing LPG in boiler applications. Again, we do the similar workup, and again, the margin here is smaller in comparison to what we've seen before. Now, one thing to keep in mind here is that there is a lot more variation around the averages that we have assumed here with the incumbent fuel, because a lot of these applications are in remote areas, and it is possible that end users pay a lot more than what we have assumed here as an average. So this particular example is very situation specific and prone to a lot more errors if we take this approach of kind of looking at average prices. So that's a key limitation of this analysis that one should keep in mind, because based on interviews and based on other qualitative feedback, we know that there's a lot of interest in industrial applications in switching over to small-scale LNG in the region. Lots of projects that are underway in the region that kind of demonstrate and provide proof points for small-scale LNG use. There are filling stations, for example, in Austria and Hungary, some LNG storage capacity in industrial applications, and then finally some LNG supply infrastructure as well. So collectively, again, on a qualitative basis, what we've tried to do here is look at infrastructure needs across the region in each of the countries, and we've kind of broken it down by value chain. And in general, right, the needs are fairly high, except for a few countries, Poland, the Czech Republic, Hungary, Slovenia, where there's some sort of a decent level of infrastructure. But in most other parts of the region, there has to be further investment in infrastructure. That then brings us to the last section here, focused on policy analysis. So it's I mean, there's a fairly broad set of stakeholders that have a role to play in providing that supportive policy and regulatory framework for driving adoption in small-scale LNG. We've kind of listed some of them here. Clearly, there are government agencies, and pipeline and grid operators. And each of these stakeholders has their own set of initiatives that can support LNG adoption. So if you take a look at government agencies, right, and it's providing clarity around policies. For example, there's very little clarity around taxation of LNG as a fuel. So that's an example where I think greater policy clarity could be supportive. some certainty, making policies, designing policies or modifying policies that provide that put CNG and LNG on an even keel relative to, let's say, some of the other incumbent fuels is I think critical. Pipeline and grid operators, opening up access, some competition in this space. A lot of this infrastructure is quasi-state-owned, and so bringing in some competition there, some transparent tariff structures would be supportive. State-owned energy companies, we actually saw quite a bit of interest in both state-owned and private energy companies in our interviews in the region. So providing them with flexibility, providing state-owned companies with flexibility to partner with a wider range of companies, or providing some financial support to private energy companies that are piloting new technologies would be supportive. Multilateral financial institutions, we saw quite a bit of concern here in general. Gas is increasingly being viewed less favorably. Gas is being viewed a lot less favorably today than it was a few years back in general across Europe, and we see those concerns kind of spill over into the region as well. I think that is an area where we see challenges going forward, but addressing some of that would be critical in order to drive small-scale LNG adoption. And then finally, the investor community, right? I think bringing in a little bit more flexibility in terms of looking at investment opportunities, especially on the infrastructure side, would be important. In terms of, we did a little bit of risk analysis and risk assessment here. We see a few major risks here that we have kind of assessed, both in terms of the likelihood of the risk and the impact that it will have. If the demand doesn't come for small-scale LNG, whether it is in heavy-duty trucking, marine, or industrial applications, then that's going to have a pretty big impact, right? Obviously, we're not going to see any growth in the small-scale LNG sector if demand growth is too slow. We believe that the likelihood of this happening is moderate, right? I mean, there's some countries where we see a lot of supportive factors where demand growth can be pretty robust, while in some of the other countries in the region, right, it's a slightly longer-term story. Insufficient diesel pricing and a poor differential or a low differential in prices of diesel versus LNG. We think the likelihood of this happening is low, just because we believe that LNG pricing will continue to be low and attractive for the long term. But that again, right, if the differential is not enough, that's a pretty big impact, because that doesn't drive demand for LNG in, let's say, heavy-duty trucking and some of these end-use applications. Decarbonization policy disadvantaging LNG. We see that as a key risk, actually. And I mentioned this just earlier as well, but the likelihood of that happening seems to be high right now, based on where the European Union is landing around natural gas and its role in the decarbonization future. And but at the same time, we don't see that having a major impact, primarily because a lot of end-use applications, especially in remote areas, there really is the alternative sources of energy are fairly lot more limited. So therefore, we think that the impact there is going to be a lot smaller than, let's say, the likelihood of that happening. A fourth risk is that gas that is being pipelined into the region from Russia, the price of that falls so low that it would incentivize reliquefaction into small-scale LNG. We don't really see that happening. We see that as a low likelihood event. But if that happens, of course, there's a pretty big impact, right? Essentially, it significantly disadvantages LNG imports from the US. Alternative emerging energy technologies like electric trucks. We don't see a big likelihood of that in the near term. We see electric trucking as a possibility, but more in the 2030s than in the near term. But of course, if that accelerates, then that could again significantly disadvantage small-scale LNG. So finally, we then kind of put together some set of policy recommendations for consideration. I won't go into this into a lot of detail, but at a high level, right? I mean, clarity around regulations and liberalizing markets that enable greater private sector investment will be supportive. Diversification of supply, pushing the region to kind of consider a wider range of supply sources. Especially now that LNG costs are falling, is going to be supportive. State-owned support for natural gas as a transition fuel towards a low-carbon future. I think that is another set of policy initiatives that would be helpful. More specific small-scale LNG-oriented investments. Some of the regions, some of the countries in the region offer incentives to electric trucks and fuel cell vehicles, extending some of those incentives, even if it is on a equitable basis, given a slightly higher greenhouse gas footprint for LNG would be supportive for the industry. And then finally, increasing awareness for small-scale LNG is critical. It was really surprising to us in our interviews at how the institutional awareness for small-scale LNG as a fuel was limited. And I think that's an opportunity. That's a very near-term opportunity that government agencies in the US that are involved in this area should really think about accelerating is growing that awareness around small-scale LNG. So that's what we have in terms of the presentation here today. Again, we strongly encourage you to kind of take a look at the report. We believe it's a lot more detailed and a really good piece of work that we've really enjoyed working on over the last few months.
Well, thank you very much, Uday and Rod, for an excellent presentation. I have thoroughly enjoyed working on this project with you over the past 12 months, and I thank you for all of your efforts, along with Kashnin and Panasway, to pull this together. So now we'd like to move into some questions and answer, and I'd reiterate to the audience that please feel free to submit any questions you have through the Q&A box in WebEx. We'll start with a question about some of the parameters and considerations for the study. And one of the audience members asks, was micro liquefaction plants connected to an existing TSO system considered for analysis in terms of the existing infrastructure? So could you talk a little bit about what you considered existing infrastructure and liquefaction facilities?
Yeah, so there are a couple of plants in the region that are providing liquefaction services that are taking gas off of a pipeline and liquefying it into gas, but it's very, very limited. I know that the report talks about that, but I don't remember off the top of my head where that infrastructure is. We did not see that as a viable source for LNG at the scale of small-scale LNG adoption that we were looking at. So while we kind of did an inventory of what that infrastructure looks like in the region, we didn't spend a lot of time on that.
Thank you. Another question from the audience. In looking at the market, the potential market in Central and Eastern Europe, do you anticipate there are any commercial opportunities for U.S. equipment manufacturers, such as LNG pumping components or systems? And if so, what sort of obstacles might there be in terms of local regulation, import restrictions, taxation, et cetera. So looking at the equipment supply side, what sort of commercial opportunities might there be?
Yeah, that's a great question. I think in general, broadly speaking, we see a lot of opportunities there, right? I think if you look at the LNG infrastructure, and if you look at the OEMs and the equipment and service vendors that are supporting that, a lot of those companies are here in the US. They tend to have the leading technology in the space. Some of them have already established manufacturing facilities as well as offices in Europe. We actually found one of them to have a manufacturing facility in the region itself, and we actually interviewed them as well as part of our research, and they actually did not see a lot of opportunity in the region, but were using their manufacturing facilities to supply equipment to the broader European Union. But yeah, we didn't specifically go and look at what are the actual opportunities in terms of the number of cryogenic pumps that you can sell or the brazed aluminum heat exchangers that can go into the region. That level of detail wasn't quite our focus here, but at a broad high level, we do believe that there's significant opportunity for U.S. manufacturers. U.S. manufacturers are at the leading edge of a lot of this technology, and they have a lot of experience in supplying this equipment. There are lots of proof points that they can provide to where their equipment is actually operating, and to that end, they are particularly advantaged. So that's another, in addition to just supplying LNG into the region, that's the other second degree of opportunity that we see for the US in promoting small-scale LNG adoption in the region.
And I
thank you. I know,
add to that, Uday, as well.
Oh, please, Rod, go ahead.
I was just going to add to that, Uday. I know part of the question was also, are there restrictions or regulations or import duties? Again, that's probably beyond the scope of the initial study, but certainly would refer any inquiries or questions or maybe some discussion with some of the trade officials, some of the U.S. Commercial Service or U.S. TDA would certainly help from that perspective as well, I would think. And as Uday noted, certainly there are opportunities for U.S. companies importing some or exporting from the U.S. side, some of the technology and products into the region.
Yeah, thank you, Rod and Uday. I realize that's outside the scope of really the core focus of this study, but we appreciate your opinions on the question anyway. And I would echo Rod that I think some of the questions on import duties could be directed certainly to either the U.S. Department of Commerce or the overseas staff, trade staff. Another question, and this was a topic that came up in several of our conversations with stakeholders, I know, over the last year. The Kirk LNG regas facility. It's now operational. There was a significant amount of development with the project over the course of our conducting of the study. How, as the user question is phrased, the understanding is that there is not currently truck loading capability at Kirk, but were that to change, if there were to be truck loading capabilities installed at the facility, how might that change the dynamic and the availability of gas in the region?
Yeah, so I think right now, I think a lot of the capacity, LNG capacity at Kirk has been spoken for, right? It has been kind of, there are off-takers who are kind of taking it all up. So the question would be, like, is there some possibility to kind of incrementally increase the capacity where you could then sell the incremental LNG that is being sourced to smaller scale end users? So I think that's one factor that has to be considered. We do know that receiving terminals can, just through operational changes, increase some of the LNG capacity that a particular regas facility might be designed for. Although it is possible that Kirk might take the terminal at Kirk might take the view that they're just kind of getting started and are not ready to kind of do that yet. But I think if I look at the question more broadly, right, which is I think the intent there. I mean, I think if you add small-scale LNG services, whether it's a truck loading facility or a capability, definitely the cost of trucking that LNG into a filling station is going to fall. More importantly, right, it gives a very clear proof point for the region that small-scale LNG infrastructure can be effective in supplying LNG and creating, demonstrating the value of small-scale LNG a little bit more clearly in the region, right? So from a cost point of view, absolutely, we do think that the transportation cost will fall. So if you try to remember that waterfall chart where we have the price differential between diesel versus delivered LNG, that will widen and there'll be a greater margin there, no doubt about it. But I think the benefits would actually be a little broader, right? Which is it'll be a very effective case study for the region to say that, okay, this can really accelerate or bring in LNG supply at the smaller scales at very cost competitive prices.
Thank you. So I'd like to now change focus slightly and ask about some of the broader policy questions or policy challenges that you raise, particularly with how gas is treated in the regional context versus renewable energy fuels. So, we see gas in the U.S. has been a major enabler of renewable energy, variable renewable energy generation over the past few years as a balancing and support generation. So, do you see, could you talk a little bit more about the role or the potential of a small peaking LNG fueled plant in the region to balance intermittent sources of generation, and just how realistic that is in the Central and Eastern European context?
I mean, I think how realistic, I mean, so let me take a step back, right? I mean, so conceptually, yeah, I mean, that makes sense, right? As renewable power capacity grows, you need a little bit of backup peaking power capability to kind of support and fill the variations that you see in renewable power generation. So conceptually, yeah, that makes a lot of sense. How realistic is it in the region? At least now, I think, at least in the near term, we don't see that as a feasible option in the near term, primarily because for you to justify a small power plant, even if it is 50, 80, 100 megawatts that is fueled with small-scale LNG, I think it is possible to find an appropriate location. I think it is possible to work out the economics where it can be a good backup peaking power option at a reasonable levelized cost of electricity. But the challenges, I think, are more on the demand side, right? Is the demand aggregated enough at the regional level in terms of renewable power capacity, and are the TSOs and the other grid operators all well integrated to the point that they can leverage this LNG-fired peaking plant to kind of source power as and when they need to kind of address the variability in renewable power generation. I don't think that part of the equation has been solved yet, right? I think from a supply point of view, from justifying the plan for the entire region, I think that is probably doable. But I feel that the other part of the equation is probably going to take a much longer period of time in terms of getting all these grid TSOs to kind of work together, aggregate the demand, and figure out a way in which. So there are lots of reforms that, to be fair, right? A lot of while we were preparing this report, we read a lot of literature on a lot of electricity sector reforms in the region. So there's a lot already happening, but I still think that there is not at the point where you could justify something like that.
And I guess just to build on that somewhat, I think your question kind of points to the need to have a more holistic view as well, Andrew. I think in terms of looking at integration of gas, and renewable gas as well, I guess, as part of the system, but certainly LNG and gas, tied to renewables, and looking at kind of that overall load factor and demand profile on a country or region specific basis. But I think it does take a kind of a broader, more integrated energy system view.
Thank you very much. I think another topic that came up and was of interest to us during the preparation of the study certainly was the effect of incentive or tax regimes in the transport sector on the cost competitiveness of either truck conversions, retrofits, or the cost competitiveness of an LNG fueled truck. So I wonder if you could talk maybe a little bit about, I think we spoke of the German example during the preparation of the study, and how governments and incentive programs can incent and accelerate the transition away from diesel fuel trucks to a cleaner burning fuel in natural gas or LNG.
Yeah, I mean, so clearly, right? I mean, if Germany has been a good example here to look at the kind of incentives that they have provided for gas fuels. Primarily the industry has kind of adopted CNG fuel trucks, but they are subsidizing the cost of the investment in a gas fuel truck. They are providing operational benefits like waiving off tolls on freeways. For gas fuel trucks. Those kinds of incentives will definitely accelerate demand and adoption of gas in the transportation sector, and particularly so small scale LNG. I mean, I think those are some good goals that the region should consider working towards. But in the near term, just simply clarifying the taxation structure, making sure that LNG gets tax credits that are commensurate to the greenhouse gas reductions that it offers relative to diesel. All of that by themselves would be supportive of driving LNG use and demand in trucking or some of these other end-use applications.
Great, thank you very much. I think looking at the time here, we're nearing the end of our planned discussion, and I'd like to reiterate my gratitude to you, Uday, Kashin, Rod, Panisway, the entire team from GTI and ADI for the excellent work you've done through difficult circumstances of the pandemic over the last several months, and also to the team at the Department of Energy who came up with this concept and worked with us on the report over the last year. It's certainly an interesting topic, and I think a very real and exciting potential market, both for economic development locally, but also for increased opportunities for commercial and trade markets for U.S. companies. So we'll continue to watch the space with interest. I'd like to thank everybody who participated today. And also, of course, an acknowledgement to all of the over 75 stakeholders who participated in virtual interviews, in-person workshops, and provided important data sets resources to the team during the course of the study. So as I mentioned at the beginning, the report is available on the USEA website. We'll make sure that Ernest sends the link out to all of you who registered, and please feel free to download, read, and contact us with any questions, or if you're looking for any additional information about how the findings of the study were reached. So Amy, Rod, Uday, Kashin, and Panisray, thank you all very much for joining us, and thank you to everybody who's participated virtually. And I look forward to the next opportunity to discuss this with you.
Thank you.
Thanks, everybody.
Thank you, everybody. Bye.